of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show. I'm Ishan Gera. In this episode, we will discuss the week's significant developments with a cover story highlighting risks emanating from cryptocurrencies. We have an interview lined up with Soma Sankara Prasad, MD and CEO of UCO Bank, where he talks about the roadmap. In a Banking for You section, experts explain what an indemnity health insurance plan is and how can it benefit consumers. And our banking expert Tamal Bandyopadhyay discusses CBDCs, cryptocurrencies, credit, and the Chanda Kochar case. At the end of the episode, we shall discuss the results of the last poll and ask you the question for the next one. Given the focus on fraud in the banking system, RBI has been proactive in taking steps to prevent such instances. 3 months after launching the Daksh system for compliance monitoring, RBI earlier this week asked scheduled banks and non-bank prepaid payment instrument issuers or PPI issuers to migrate to Daksh by January 1st, 2023 for payment fraud reporting. Talking about frauds and failures, it has been a tumultuous year for cryptocurrencies, and it doesn't help that most governments are losing their confidence. Our cover story highlights risks emanating from cryptocurrencies, the market size, and their future.
It's 100% speculative activity, and I would still hold the view that it should be prohibited. I mean, countries have been taking different views, but our view is that it should be prohibited, because if it is allowed to grow, that if you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies.
At the recent BFSI summit, the RBI governor was categorical about his opposition to cryptocurrencies. He pointed out that the next financial crisis may come from cryptocurrencies if allowed to grow. The announcement from the governor comes at a time when Bitcoin's value has crashed following the collapse of cryptocurrency exchange FTX last month. A business standard analysis shows that Bitcoin is the biggest loser compared to major currencies. While the Japanese yen lost 15.9% in value, the world's largest and most recognizable currency lost 64.8% since January. Its value plunged from $47,733 on January 1st to $16,815 on December 27th. But volatility in Bitcoin is not a new thing, and the cryptocurrency problem extends beyond Bitcoin. Countries worry that private digital currencies could be misused to commit fraud. When a company makes an initial public offering or an IPO to raise capital, it has to fulfill the market regulators' rules. In the digital world, companies can launch their own coins using initial coin offerings and raise capital. Some of these ventures are legitimate, but most are fraudulent. A study conducted by Status Research for ICOs with more than $50 million market capitalization found that 80% of ICOs were scams, 6% had failed, and 5% had gone dead. Even among the 8% that survived, nearly half were dwindling. So can cryptocurrencies trigger the next crisis? For now, the crypto market is too small to make a dent in the financial system. The global cryptocurrency market cap is $846 billion. In October, the total market capitalization of all companies listed on exchanges worldwide was $92 trillion or 108 times the entire crypto market. India's scenario is no different. Despite being labeled as the second largest crypto market in the world in terms of users, India does not compare to the likes of the United States. Business Standard analysis found that at the peak of the growth, trading volumes at India's largest crypto exchange, WazirX, were less than 2% of the total trading volumes of equities at the National Stock Exchange. In the US, the ratio was a much higher 12% for the New York Stock Exchange. The trading value has declined since the new taxation rules were introduced in the last budget for crypto assets. The daily trading volumes at just over $1 million in December were just a fraction of the $415 million traded on April 18, 2021. Can cryptocurrencies survive? We spoke to Rajgopal Menon, Vice President WazirX, to understand.
To paraphrase Victor Hugo, crypto is a powerful idea whose time has come and no power can stop it. So this has been tried by various countries, including the most autocratic country in the world, China, but they have not succeeded in banning crypto. So it's clear that crypto is here to stay, and even the RBI has understood it. So if you can't beat them or ban them, join them seems to be the thinking. So what we are going to see is the CBDC experiment that the RBI has just rolled out in November and December shows that the government is open to the idea of understanding the benefits of crypto.
If so, how can they operate?
Now, whether crypto should be treated as an asset, as an investment, as a security, as a commodity, that has to be decided by a regulator that needs to be set up by the government, so that the rules of the game are clear for all stakeholders, whether it is the government, whether it's the tax authorities, the law enforcement agencies, and of course the companies operating in this space.
Right now, the market is too small to impact India, but the operative word in the governor's address was if. He said, if allowed to grow, cryptos could lead to the next financial crisis. It is contingent upon the government whether it wants a ban or uses taxation and regulation to tighten the levers around cryptocurrencies. The RBI governor has made his stance clear. While the RBI is indeed against cryptocurrencies, the government may turn towards treating them as an asset. However, all this depends on how much trust can be reposed in the system. The markets have placed their trust in public sector banks and their performance has been stellar. UCO Bank reported a 2.5-time increase in profits to 505 crore rupees in September quarter compared to last year. Manojit Saha spoke with Soma Sankara Prasad, MD and CEO of UCO Bank, on interest rates, credit growth and the roadmap.
UCO Bank was the first bank to receive RBI's approval to open a special Vostro account for INR trade. Today we have Soma Sankara Prasad, MD and CEO of UCO Bank, to talk about several issues on bank strategies. Mr. Prasad, welcome to the show.
Thank you.
Coming to loan growth first, loan growth was still robust till the second quarter. Is the momentum still continuing on loan growth in the third quarter also?
Yes, I mean, as far as the loan growth is concerned, the momentum is continuing even into the third quarter. But what we gradually expect is that over a period, maybe if you look at it till March 2023, it will gradually moderate. And for this year, we are estimating it will be around 15 to 16%.
Because lending rates have gone up very sharply in the last 8 months. So, do you think that could hamper the loan growth a bit?
We have this notion that the lending rates have an impact on the loan growth.
Mm-hmm.
To a certain extent, it is true, but it is not entirely true for the simple reason. If you look at COVID, during the COVID time, the interest rates were at historical low. But there was no demand for loans at that point of time, either from the corporates or from the individuals. So I think the loan growth to a large extent depends upon how the economy is doing. And I think all of us are aware that India is the fastest growing economy in the world, and we are the lone bright spot in the world. So I think it is directly linked to the economic momentum in the economy. So I think though the lending rates going up do have an impact on the loan growth to a certain extent, we have not seen any such impact so far.
Do you think interest rates have peaked or near peak?
Yes, I think the interest rates have nearly peaked because we have had a look at the inflation data has come out for the month of November, where the inflation has come below the RBI's comfort level of 6%. And all of us also should remember that whatever repo rate hikes have been done by the RBI, the impact is always there with a lag.
Right.
And even in US, we find that the inflation is coming down, and the US Fed has also increased the rates only by I mean, they will reduce the quantum of spread from 75 basis points to 50 basis points.
Right.
So I think keeping all this in view, I think the interest rates have peaked, and I think maybe they'll go up by another 25 basis points. I think that will be the terminal rate.
Also, the other issue is the deposit growth and the loan growth. We have seen deposit growths are lagging loan growths. Banks are also slowly inching up, increasing their deposit rates. Do you think deposit rates have further scope to go up?
Deposit rates always go up with a lag. Though the repo rate has gone up, for instance, when you looked at when the repo rates have actually come down, even then, when the repo rate comes down, the decrease in repo rate was immediately passed on to the borrower.
Right.
I'm talking about 2 years back. But the deposit rates gradually came down. Similarly, when the repo rate has gone up, the transmission on the lending side happens very quickly. But on the deposit side, the transmission has not happened that quickly because all the banks were flush with liquidity.
Correct.
Now, with the liquidity situation becoming a little tighter for the banks now, we have seen that number of banks, including ours, have increased the deposit rates. And if you look at the inflation data and the deposit rates now, I think now we have entered an area where the deposit rates are, there's a real positive rate
Correct.
for the deposit,
Correct.
which is
Correct.
above the inflation.
So deposit rates, may have also peaked. Is that what you are suggesting?
I wouldn't say that they have peaked. It depends on how the liquidity situation pans out and how the loan demand is. But I think the interest deposit rates have gone up in the last 2-3 months. And I think now we'll have to see on the impact on the deposit flow after the deposit rates have gone up. And depending on the deposit flow, then a call will be taken by the banks whether to further increase them or to hold them at the present level.
Coming to the margins of UCO Bank, UCO Bank's margins, domestic margins were close to 3% for the second quarter. As liquidity situation is tightening, do you think the bank will be able to maintain those levels?
I think we should be able to maintain the levels because, see, our credit deposit ratio is still only 60%.
Right.
Which is quite low. And a lot of our money had actually gone into government securities when there was a lot of liquidity in the system.
Right.
So the investment to, deposit ratio, as you call it, is pretty high for the UCO Bank.
Right.
So considering the fact that we have a lot of liquidity as far as the SLR securities are concerned,
Right.
I think we can utilize that liquidity which is available by way of either sale or by borrowing against SLR securities so as to reduce our cost of funding. Though the deposit rates also have gone up, they'll have some impact on the NIMs. But by and large, we expect the NIMs to remain somewhere between 2.85% and 3% going into the next 2 quarters.
UCO Bank has a capital adequacy ratio of 14.3% by the end of September this year. Do you see any fundraising activity by UCO Bank to increase the capital adequacy ratio?
See, we are adequately capitalized at 14%, 14.03. And you must remember that we have made a profit of almost 625 crores in the last 2 quarters.
Right.
And we are projected to earn a net profit of 1,500 crores.
Right.
So actually this profit will be added back to the capital only at the end of the year. And once it is added back, our capital adequacy ratio will cross 15%. So we are planning to raise another 1,000 crores by way of Tier 1 bonds, for which we will be approaching our board for approval.
Do you have any plans to sell NPS to the NARCL?
NARCL, there is one large NBFC account where NARCL is also one of the bidders.
Right.
So the decision will be taken by the COC based on the bids.
Right.
Other than that, we have some small accounts where we are not the leader of the consortium.
Right.
So we'll basically go with the other lenders in the consortium after discussing the offer made by the NARCL.
And finally, on the issue of UCO Bank receiving an approval from RBI for opening special Vastu account for INR trade, have any accounts already opened by the UCO banks? Any trade has taken place?
This is a mechanism which has been put in place by Reserve Bank of India to internationalize the rupee. And the thing that we should remember is that this mechanism is country agnostic. It is meant for all the countries.
Right.
But so far, we have got the approval for opening one account of a Russian bank called Gazprom Bank.
Right.
It is called the Special Vostro account. So that account has been opened. But so far, no trade or no transactions have happened.
Is there any other country which has approached UCO Bank for opening for similar accounts?
I don't have the information, but I mean, there are a number of countries which might be interested in this rupee mechanism, especially countries like Sri Lanka, Bangladesh, some countries in the Gulf, and some countries in Africa with whom India has a lot of trade. So I think this is a new mechanism which has been put in place. It will take some time for it to pick up. But going forward, I think we'll see a strong interest in this rupees settlement mechanism from these countries.
Mr. Prasad, thank you so much for speaking to Business Standard. It was a pleasure talking to you.
Thank you so much. Bye.
Thank you.
As far as loan growth is concerned, it will continue into the third quarter but will moderate by March, Prasad told Manojit. The loan growth will moderate to 15 to 16%. He also said lending rates do not significantly impact loan growth. They are linked to economic momentum. Another sector that is up for change is the insurance industry. At a recent BFSI summit, top insurance industry doyens discussed on India's road towards insurance for all. But before we move towards different insurance products, we need to understand the most basic ones, like the indemnity health insurance plan. In a Banking for You section today, experts explain what an indemnity health insurance plan is and how it works.
In India, quality healthcare comes with a cost. A health insurance policy can be your savior in the unfortunate instance of a critical ailment or health emergency. Notwithstanding the type of health insurance policy you choose for yourself and your family, it is essential to understand what a health indemnity insurance plan is. Also known as Mediclaim policies, indemnity health insurance plans allow you to reimburse the actual medical expense arising from a hospitalization except for deductibles. It allows the policyholder to claim up to the limit of the sum insured as per the terms and conditions. An indemnity health insurance can be purchased as an individual or as a family floater plan. Let us understand with an example. Ms. Deepal Desai had to undergo a planned surgery in a hospital, the cost of which was 5 lakh rupees. If she has an indemnity-based health plan with coverage of say 8 lakh rupees, then her policy will pay 5 lakh rupees incurred as hospitalization expenses. An indemnity health insurance plan allows a cashless payment option during hospitalization. The insurer pays the billed amount directly to the hospital. This may cover pre-hospitalization expenses such as diagnosis and tests, and the expenses during hospitalization such as doctor's fees, ICU, room charges, diagnostic tests, surgery, medicines. Certain policies also cover post-hospitalization expenses like home nurse, medicines, and daycare facilities. Indemnity plans cover treatment related to COVID-19 as well. In order to claim insurance, it is required to have at least 24 hours of hospitalization. Also, if a patient is not in a condition to visit a hospital or the hospital doesn't have any beds available, the policy may cover for the expenses of home hospitalization. However, before zeroing in on the insurer, it is important to look at the list of hospitals covered by the insurer. Usually, health insurance companies have a vast network of covered hospitals in their list, so an insured person gets the flexibility to choose his or her hospital from the countrywide list. This policy covers the expenses from diagnosis to hospitalization and post-hospital care. Some treatments like pregnancy, cosmetic or dental surgeries, injuries in war, HIV, intentional injuries, and congenital diseases are not covered by policies under the indemnity plan. But compared to fixed benefit health insurance plans, indemnity plans are less expensive.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Despite the government's best efforts, health insurance has not reached all. Meanwhile, out-of-pocket expenses have been rising, highlighting the need for an indemnity plan. While the insurance industry abounded with changes, so was the banking sector. The RBI's launch of CBDC, the fight against cryptocurrencies, and the credit offtake were topics of significance in 2022. We had a chat with our consulting editor Tamal on all three issues, the rate expectations and the Chanda Kochar case. Let's listen in. Hi Tamal, thanks for coming on the show.
Thanks, Ishan.
This is the last show of the year, and your column was a perfect year ender talking about three C's: the credit, the CBDC, and the cryptocurrency. Now, I would like to start with CBDC because you asked this question to the governor as well. What is the future of CBDC in general public transactions? And won't it just stay a currency for enthusiasts?
Yeah, cynics are saying that. Why do I shift from normal UPI to CBDC? What do I get there? But I think it's a currency of the future. Let's not talk about how CBDC would fare in 2023. I think we need to talk about CBDC 2024, 25, 26, a few years down the line, because this is not happening only in India. It's a global movement. Initially, I think it was a bit of optics also to prevent the enthusiasm surrounding cryptocurrencies that's how it come up. But CBDC is a very different animal. It's nothing to do with crypto. It's just a currency. And you mentioned about, I asked that question to Governor at the Business Standard BFSI Summit last week. Yes, and there he mentioned the two things which he have been emphasizing on. It's essentially, it's a cash, it's as good as cash. There are other benefits such as Reserve Bank of India's cost of printing money will dramatically go down if you and me shift to this, and the cross-border exchanges, currency transfer, etc., also become swifter and much cheaper. So, but at the end of the day, I would not like to believe. I don't believe that it will take off just in a jiffy, and you and me, everybody will rush to have CBDC. No, it's a currency of the future.
Now, it's interesting that you mentioned cryptocurrencies because in your discussion at the BFSI event, crypto was a main headline point that everybody carried. Now, you mentioned cryptocurrencies in your column also and quite succinctly mentioned the risks emanating from them. Isn't it better to treat them as assets rather than outright ban them?
Well, it is not an asset, but because there's nothing underlying in it. No? So that's the problem. It's neither a currency nor an asset. Because when you invest in gold, when you invest in real estate and the stocks, there is some underlying value. But here, it's nothing but something which is driven entirely by speculation. Internationally now, there have been sort of concerted efforts to contain crypto. But Governor made a very critical statement. He says that what's happening elsewhere in the other side of the world, we don't care about that. In India, we don't want crypto. It needs to be banned. Finance Ministry, the government, has had a sort of ambivalent approach till now. There's some kind of tax has been imposed in the last budget. We need to see going forward how ministry treats it. But as of now, RBI continues with his stance, and I don't see there will be any change, a big no to crypto, because this is a threat to the financial sector stability.
Third C we move on to, which is the credit part. Right. And rather than looking back as to what has happened to credit, let's look forward. What are your expectations with credit growth now that interest rates are quite up in India?
Well, credit growth, as we speak, around close to 18%, which is pretty high. It's a decadal high credit growth. A lot of pent-up demand, that's what we are seeing. At the same time, will it continue to grow at this level? And will the banks have enough ammunition to support the credit growth, because deposit growth is still lagging behind? So that's the question we need to ask. If you talk to the bankers, they are saying they are pretty happy the way there has been credit demand, and it's not that they are over enthusiastic. That's what they claim, that we are not pushing down loan through people's throat. So bankers are pretty hopeful the credit growth will continue, and deposit growth is slowly catching up. It's still, there's a difference, but banks have been raising their deposit rates. So they are expecting that deposit growth will pick up, and they will be able to continue with the kind of growth. But if you look at the micro level, there are a bulk of it is going to the retail sector. Banking system needs to keep a close watch on the trajectory of the credit and where the credit is growing.
Can't let you go without discussing interest rates. You've been bang on with your forecasts, and we would like to know, actually, our viewers also, as to what is your forecast for the coming year. Are we expecting rates to go beyond 7 or 8% this year?
No, I don't think beyond 7 and 8%, but rates will go up. How much? I think anything between 25 and 50 basis point. Next rate hike will happen. It's not will. The next rate hike may happen in February, immediately after the budget. So there is no escape from another dose of hike, which is probably 25 basis point. And then there could be a temporary pause by RBI, wait and watch. So I would like to believe RBI will pause after a 25 bips hike, and then it will be open for probably another 25 bips.
Another interesting topic as we speak is Chanda Kochar. What signal does this episode send for the market?
Well, I think it's a surprise and shock. Surprise for us, the watchers, because this case is pretty old. CBI filed the FIR in January 2019. Now it's almost 3 years now. Had it been done 2 years back, even a year back, I would have understood that yes, it's sticking to a logical conclusion. But now, after 3 years, or after close to 3 years, has the investigative agency come across certain new information which can actually, establish the culpability of the banker? Because in this case, in the financial sector, if you see the record of the investigative agencies is pretty poor.
Will it affect the credit offtake in the market? Because it will hurt sentiments, of course.
Definitely, it will hurt sentiments, but I don't think it will because it's an old case. As I said, there's a shock and surprise, but it's not new. It'll be business as usual. I don't see any impact on the credit offtake.
Got your point. Thank you. Thanks a lot for your time this week. We hope to see you next week again. Thank you.
Merry Christmas and Happy New Year.
Tamal believes that CBDC needs to be looked at from a long-term perspective. On rates, he categorically says that policy rates shall stay below 7% in the coming year. Last week, we asked if the government should introduce a private sector CEO for Life Insurance Corporation. While LIC's performance is better than other public sector insurers, its market record has been dismal. The stock is trading below its listing price. Most people believe a private sector solution may work for LIC. 68.6% of the people were in favor of a private sector CEO. This week, we want to know if the government should ban cryptocurrencies. RBI governor at the BSPFSI summit said the cryptocurrencies could cause the next financial crisis. Our polls open on Friday. You can respond on Twitter, Instagram, Telegram, LinkedIn, YouTube, and our website. We'll be back next week with more news and analysis. The government can keep on treating cryptocurrencies as assets as well. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.